During the pandemic, we saw what I think is fair to call this insatiable demand for Canadian real estate. Of course, lending costs were very low and people were getting pretty excited about the market. Check out this intriguing bit of information from one of our longtime guests, Steve Saretsky, saying, chatting with a couple of big developers in Calgary, pre-sale condos flying off the shelf now, all being sold to Toronto investors. It seems that for all the chat about Calgary still being an affordable market, Toronto investors are taking notice. Let's bring in Steve Saretsky now, the realtor. He's at Oakland Realty, also the author of the Saretsky Report. Always great to have you with us. This is an intriguing thought that I guess the GTA market has been exhausted to a certain degree, so these people are actually looking west to Calgary pre-sales?
Yeah, I mean, just chatting with a couple of big developers over there. I've got a little bit of business over in Calgary as well, so it's a market I kind of keep close tabs on. But yeah, just basically, I mean, as everyone knows, or some people know, that there's sort of these realtors in Toronto. We call them the pre-sale whales, and basically they pretty much entirely focus on new development, and then they have, you know, large investor bases. And so what we've been hearing is that they've been actually flogging Calgary pre-sale projects and selling very, very successfully. Because I think when investors in Toronto and even here in Vancouver as well look at these projects, they go, oh, wow, you know, I can pick up a one-bedroom condo for, you know, $250,000, and you know, this word cash flow, which really doesn't exist in the GTA and in Vancouver, is quite attainable in Calgary. So we're seeing a lot of the condo market in Calgary is very, very stagnant for years, and it's been a tough sell. But it appears that the Toronto investors are snapping these projects right now.
We know, Steve, of course, that investors do play an important role in the real estate markets in the sense that we don't have a lot of rental stock either. They buy investment properties, they rent them out. I mean, I started off my life living in the city of Toronto after school, renting as well. But at the same time, I feel like there could be a distortive effect here, only because of what happened during the pandemic. There was a lot of money that seemed to move out of the GTA and go further afield in southern Ontario, pushing up prices in markets where you'd never expect soaring prices. Is there a danger here of, you know, people taking their big gains in real estate in Toronto and then now pushing that money into Calgary?
Yeah, I think so. I mean, I think that the more investors we add into the Bank of Canada is flagged as a risk, right? I mean, the growing investor base in a down market, they're typically kind of first to hit the trigger on the sell button. So I think it adds more risk to the market. I know this is something OSFI has talked about as well. You know, I'm having lots of conversations with clients as well, even, you know, domestically here in Vancouver, which is, hey, listen, you know, my property that I bought, you know, a couple of years ago is up, you know, $300,000-$400,000. Let's go refinance that. Let's take some money out. And where can I get cash flow? Where can I still get value in today's market? My gosh, look at prices. And so I think that Calgary is kind of that value trade that we're seeing to getting a lot more dialogue, people focusing in on that market right now, which again, if you dial the clock back 2-3 years ago, I think people would have looked at you pretty funny that you're parking money there, because it has been really dead money for the last 10 years in that housing market.
Let's talk about parking money, that idea, right? Because obviously, as we were saying before, an investor can play an important role in the market if they're renting it out. If you can, you know, take your equity out of a hot market like Toronto or Vancouver where prices are soaring and equity has soared and put it into Calgary, is there a danger that some of that just might remain empty, just an investment vehicle, not even looking to want to rent it out?
I mean, there's always a possibility of that. I mean, I don't know. I think that people that are typically going to Calgary, I think are typically different type of investors. I think they're more cash flow oriented investors. I mean, the idea of parking money in a one-bedroom condo in Calgary and hoping for some appreciation over, you know, 5 to 8 years, I think is not the same as investing in Toronto and Vancouver. Like, you know, buying condos in Calgary is a much different game. There hasn't been any lift there historically, and typically, like I said, it's kind of been dead money. So much different markets. I think where we tend to see a little bit more speculation for upside is in Vancouver and Toronto, where, you know, yeah, realistically, when you get 20% annual price growth, in a lot of cases, it might make more sense just to leave the unit empty and not deal with the tenant. But I think in the Calgary market, I don't see those kind of investors flocking there for hopes of capital appreciation.
It does make sense when you put it that way. Steve, I wanted to ask you too, obviously it's only been sort of speculation as to what the federal Liberals might do about housing this year, but they did task the minister in charge of the file with looking at where investor down payments are coming from. That raises a lot of questions about going forward. Will people have that equity in their house just to use to invest in other homes? I mean, it's all speculative at this point, but is there some danger that the game could change at some point this year?
I mean, I think it's always possible. I think there's a lot of political pressure building that need to do something. You can see the dialogue that it's started to shift. The dialogue is, who's the next sort of person or group that we can go after? And I think that they are pointing to investors. So I wouldn't be surprised to see some tightening on the margins. Again, perhaps from OSFI there in terms of qualifications for investors adding second or third properties. I think that's a real risk that's out in the market, but we'll have to wait and see because, reading a lot between the lines as well from OSFI, the new head of OSFI there, Peter Rutledge, he seems to be very pro-supply and less about, tightening or restricting credit. So it's going to be interesting to see, how the rest of the year shapes up.
Steve, before I let you go, 1 week from today, it's Wednesday, 1 week from today, Bank of Canada has a rate decision widely priced in by the markets, widely expected by Bay Street and probably by you even. I think I've been reading your tweets that they're going to have rate hike liftoff. How many rate hikes would it take from our central bank before real estate would start to feel it in a real and perhaps even damaging way?
Yeah, I mean, I think personally 25 basis points seems to be baked into the cake here in March. I've always highlighted that as soon as you get mortgage rates north of 3, closer to 3.5%, I think that's a real drag on the housing market. So I always take people back to 2018, that in Vancouver, when mortgage rates hit 3.5%, Vancouver home sales for the year in 2018 fell to an 18-year low. In the GTA, it was a 10-year low because rates were 3.5%. Everybody assumed they were going to go to 4%. And so that really just paused buyer activity. And then so where I look today is we've got the 5-year fixed mortgage stays at 3%. So it's getting up there and we're starting to see a little bit of easing in the housing market. The problem is that you still got these variable rate mortgages hovering around 1.5%. So once the Bank of Canada starts hiking their overnight rate, that will flow through into the variable rate mortgages. So I see that being more of a drag. I don't think it's going to take more than 3-4 rate hikes from the Bank of Canada to really start to slow housing. So I think it's going to be a lot less than the market anticipates.